industry types that are out there. I put at the head of it construction. Now that includes home builders, plumbers, electricians, pavers, excavators, HVAC, roofers, asphalt companies. It just goes on and on and on. I love this market, and I have really dedicated my time when I am going to be talking to business people outside of this office to talk to people in the construction industry, and they're everywhere. Even in my office right here, I run across people all the time that are in here working on the office. There's 60 some offices in this building, so I can see people that have ladders and and electricians, and I can go talk to them. Plus, the people that own this building, they own a lot of other ones, and they're going to be able to become a great resource to me. I'm just now beginning to talk to them after all this time. I would pick out this as an industry for two reasons. Number one, most of these folks have great revenue. It's going to be almost all over 15 to 25,000. Most of them are going to be 50,000 and above on a monthly basis. Some of them several hundred thousand. These folks need money all the time, and especially a lot of subcontractors. They've got crews they got to pay. If they're a landscaping contractor, they're always messing up a mower or something. They don't have time to go do an application, run it through, and hope in another week to 10 days they're going to get an answer on whether or not they can lease equipment. Most of the time it's no. 90% of businesses going to banks is going to be a no. So I would pick out construction over every one. If it were me, if you feel comfortable talking to construction people, I love retail because all day long you can pass out cards in retail. The smaller ones like ice cream shops and little lighting companies, shipping and mailing. Usually the owners there, they're really good. And if you see any kind of landscaping, and by the way, this is the perfect time. But landscaping, tree service, and pool contractors are fabulous. They're going to need money all the time. Then there's repair shops, especially auto and truck repair, but pretty much any type of repair shop. There are some high risk industries out there that may only qualify for 25 to 100% of what their current monthly revenue are, and you just need to understand what those are. Most of them are seasonal. A lot of them are iffy type industries because of the fact that they can come and go tomorrow. And credit repair companies, I think, are great, but if they're going to take funding themselves, they're only going to get anywhere from 25 to 100% of what they're doing on a monthly basis. But here are our spotlighted deals of this past week. Number one, a financial services company. We got $30,000 for. They're out of Connecticut. They needed funds for office equipment. They didn't want to go lease it. They just wanted to go buy it. We got an insurance service. They got 50,000 funded in 6 hours with online checkout. They needed funds to hire new agents and to do advertising. HVAC, 65,000. They're out of Kansas. This is their fourth renewal. They need the funds for inventory. They got a job coming up, and they're waiting for other people to pay them. So they just needed it for short term. A restaurant for 22.5 in Texas. They needed it for a new piece of equipment. A medical spot, a $250,000 one in Florida. Online checkout in 2 hours. The client took another 4 days to decide. They needed the funds for their business expansion. That's a big one. Tax and accounting service, 50,000. They're out of Mississippi. They needed funds to advertise and hire 2 new service agents for this season. Landscaping company, 12.5 in Georgia, needed funds for a new mower. We got a remodeling and handyman service, $20,000 in Alabama. Needed funds for paint and trim inventory. By the way, these aren't the largest necessarily for the week. We got others that were 100, whatever. These are just different and unique in different states. A masonry company, 75,000. They just need it for working capital. Got payroll and some other things coming up. And then a healthcare therapist, 25,000 out of California, working capital. The insurance payments from the government are late, and she doesn't have the funds to get through the month until her invoices are paid. So and they chose to move forward with us for $75,000 with the 100% prepayment discount addendum. David mentioned this the other day, but they accepted the offer. They took the 75, and that was on December the 23rd. All right. Well, listen. Um, I just want to make sure everybody understands how the whole system works. I know you do because you're pros, but our lenders on the Bank Breezy platform, they all determine the client's funding amounts. It's never determined by us and what the factor rates are, and they do all that by assessing what the business financial health looks like through cash flow, and primarily they evaluate overall revenue as this produces insight into the business's ability to actually repay it. And then it talks about lenders also consider the length of time they've been in business, the industry type, what kind of existing debts or financial obligations that they may have. And ultimately, the funding amount is tailored to each individual business based on an awful lot of different factors. But the pro tip of the week is, people are asking, why is it that I submit a file, they're doing this amount, and I'm getting 25%, not even 50% of their monthly revenue? I want to give you some factors that come into play. Number one is the credit profile. If it's really, 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 really bad, so or even not so great at all, and it's not extremely bad, that's going to determine how much that each one of these lenders are going to risk. Of course, the industry type makes a difference, whether it's trucking, real estate, or a healthcare facility. The number of positions is a big one, and we're going to talk about that in a few minutes. The number of deposits. We have one today. I'll tell you a little bit about on their deposits, and then of course what their daily balances are. When it comes to FICO score, if it's below 600, it becomes a higher risk funding for almost every lender out there. So they're going to take that in consideration when they're looking at the file to see whether or not it's going to be 100%. And here are some of the high risk industries that are out there, like transportation and trucking is probably number one. Real estate, seasonal tax preparation, where they don't do any other type of accounting. They just do it during that season. Consulting, when we don't really know what the consultants are doing, we have to get more information before we submit it to be able to get a better look. But if they're doing 50,000 or higher, that's okay. Anything in energy and solar, because these solar companies pop up and go out of business very, very quickly. Credit repair companies, especially if those companies aren't legally compliant with the federal regulations for them. Certain financial services, and of course, family farms. These are all high risk ventures. So that makes a difference in whether they're going to get 100%. Then the number of positions. If our funding is a second, third, or fourth position funding, which we do all the time, then all the other positions that are head up can really factor in what they really can afford to pay. So if their debt to income ratio on just the funding, not on all their other bills, is 35% or more of the total amount that they're doing in monthly revenue. For example, if they're doing 100,000 a month in revenue and 35,000 of it's going to pay back positions in the system, then that's going to create problems, and that's going to determine really how much they're going to be able to afford. And then, of course, number of deposits. A lot of our lenders, well, almost all of them require 3 to 5 deposits. The A lenders, they'll take a minimum of 2. Some of them require 5. And the reason you want that is because I had a situation today. Their deposit didn't hit for the month of April, but it went into the month of May, and the month of May is huge. But because it didn't hit in the month of April, they really could not. They only had like 11,000 in revenue, and they already have other positions, so they really for that month couldn't afford it. Fortunately, they have such high balances on a daily basis. It was able to cover all that, and it's not an issue. But daily balances is a big deal. A lenders like to have 1,000 in daily balances, but I want you to look at this. These are the May bank statement of a business that they were wanting to get. Let me make sure there's nothing to identify this business, and there isn't. They wanted to get in a funding of $50,000. Well, you're looking at their May bank statement summary.